As the checks rolls in, the Biden campaign has been carefully cultivating its relationship with the business community, with a focus on Wall Street. The outreach has included offering private briefings ahead of major policy rollouts and dangling various donor packages for the upcoming and mostly virtual Democratic National Convention. Oh, you gotta love private briefings for donors. In one call last month, two of Biden's top advisors on financial policy, Ben Harris and Jake Sullivan, led a wide-ranging conversation to preview the candidate's economic plan, which focuses on broad policy initiatives like investing in green infrastructure projects and minority-owned businesses. Two former Treasury secretaries, Robert E. Rubin and Jacob J. Lew, were part of the call. Now, folks, for those of you born a little after the 90s, do you know who Robert Rubin is? There he is. You know who Robert Rubin is? Anybody? All right, Robert Rubin was Bill Clinton's Treasury Secretary. Robert Rubin was a major, and I mean major, servant of Wall Street. Here's a little article. Wall Street deregulation pushed by Clinton advisors, documents reveal. Wall Street deregulation, blamed for deepening the bank crisis, the 2008 financial crash, was aggressively pushed by advisors to Bill Clinton, who have also been at the heart of current White House policymaking, according to newly disclosed documents from his presidential library. This was written when Obama was still president. The previously restricted papers reveal two separate attempts in 1995 and 1997 to hurry President Clinton into supporting a repeal of the Depression-era Glass-Steagall and allow investment banks, insurers, and retail banks to merge. A Financial Services Modernization Act was passed by Congress in 1999, aka the repeal of Glass-Steagall, which then led to the 2008 financial crash, giving retrospective clearance to the 1998 merger of Citigroup and Travelers Group and unleashing a wave of Wall Street consolidation that was later blamed for forcing taxpayers to spend billions bailing out the enlarged banks after the subprime mortgage crash. The White House papers show only limited discussions of the risk of such deregulation, but include a private note which reveals that details of a deal with Citigroup to clear its merger in advance of the legislation were deleted from official documents. Quote, "Please eat this paper after you have read it," jokes the handwritten 1998 note addressed to Gene Sperling, then director of Clinton's National Economic Council. Earlier in 1995, newly appointed Treasury Secretary Robert Rubin, his deputy Bo Cutter, and senior advisors, including John Podesta, we know John Podesta, gave the president 3 days to decide whether to back a repeal of Glass-Steagall. In what Cutter described as an action-forcing event, he wrote to Clinton on February 21st telling him that Rubin wanted to announce the policy before it was raised by the House Banking Committee on March 1st. Quote, "In order to position Secretary Rubin, rather than any of the regulators, as the administration's chief spokesperson on this issue, the Secretary intends to discuss the administration's position at a speech which will be covered by the press on February 27th. Bill Clinton's advisors repeatedly reassured him that the decision to let Wall Street dismantle regulatory barriers designed to protect the public after the Great Depression simply represented inevitable modernization. But the new documents cast fresh light on the way that the White House was first ushered towards deregulation by the tight group of Robert Rubin allies. Let me just break it down for those folks in the back. Just translate this. Robert Rubin was a Wall Street vulture. He went on to work at Citigroup and run Citigroup, who convinced Bill Clinton, who was taking a hell of a lot of money from Wall Street in the 90s. That's why Hillary Clinton then got a lot of money from Wall Street when she ran for senator. Robert Rubin was the leading cheerleader, along with Lawrence Summers, in the Clinton White House to deregulate the entire financial industry. to get rid of the protections that were there since the Great Depression under Franklin Delano Roosevelt that separated commercial banks and investment banks. What could go wrong, they say? It's just modernization. Well, that modernization led to an unprecedented housing crisis, which actually now with the coronavirus might be beaten with the upcoming housing crisis that very few are talking about. And basically, Robert Rubin said, let Wall Street have cake. Let Wall Street have cake. And that is who? Joe Biden's campaign literally has joining them on, quote, policy briefings. Gotta love that campaigns are literally giving policy briefings to top donors. Talk about working for corporate masters. Robert Rubin, who helped Bill Clinton and the Democrats of the 90s set the conditions that led to a global financial crash, is basically on the policy calls with Joe Biden's campaign to brief Wall Street vultures. This is who they were on calls with. Major Wall Street executives and investors, including Blair Efron, co-founder of the financial advisory firm Centerview Partners, Penny Pritzker, a fundraiser and former Commerce Secretary, David Cohen, a top Biden bundler and Comcast executive. Oh, Comcast, just the parent company of MSNBC. No massive conflict of interest there. And Eric Schmidt, the former chief executive of Google. So I don't know what is more corrupt and bad. And just to be clear, I just want to be clear, Trump does the same things. The Republicans do the same things. So we're not making, I'm not here to be like, oh, the Democrats are doing something the Republicans don't. It's all the same. That's the whole point of this. We're being told, vote blue no matter who. We're being told that Biden will end Trump's corruption. But this is corruption right in front of your face. It's just the accepted corruption. The corruption that the corporate media accepts because they're in on it. The corruption that the think tanks accept because they're in on it. The corruption that the lobbyists accept because they're part of it. The corruption that the banks love because they're part of it. I mean, it's unbelievable. Joe Biden's campaign is literally holding presentations to donors with Robert Rubin, one of the most neoliberal servants of Wall Street you could imagine, and at the same time saying, I'm a middle class guy. I'm Union Man Joe. I'm going to take it to Wall Street. I'm going to undo Trump's tax cuts. We gotta help working families. Want a little bit more on Mr. Rubin? After his time in Bill Clinton's administration, helping to destroy the global financial economy, Robert Rubin resigned from Citigroup following months of criticism of his performance at the U.S. bank. So he went from Clinton's administration and helping to basically open up the floodgates so Wall Street could run wild in the 2000s. Then he went to run Citigroup, and his departure came as Citigroup was in advanced talks to combine its Smith Barney retail brokerage with that of Morgan Stanley, and perhaps eventually sell Smith Barney to Morgan Stanley. A combined brokerage would be the nation's largest by number of advisors. Rubin admitted to not having foreseen the credit crisis and market deterioration, which caused roughly 88% of Citigroup's share price to evaporate over the last 2 years. The bank has taken $45 billion from the government's Troubled Asset Relief Program, and in November won a federal bailout that will limit losses on $306 billion of toxic assets. Rubin himself declined a bonus for his second straight year. Oh, how patriotic to decline your bonus. So let's get this straight. Robert Rubin, who helped crash the global economy by convincing Bill Clinton to basically give sexual favors to Wall Street in the 1990s and basically unravel all the rules that protected consumers for decades, since the New Deal. Robert Rubin then convinced Clinton to repeal Glass-Steagall, which, by the way, Joe Biden, as a senator, supported, by saying, no, this is just financial modernization. It's not going to let Wall Street run wild. It's going to, consumers will still be protected. And then when he went to Citigroup and the house of cards fell, because this is exactly why there was a credit crisis and market deterioration, because of the repeal of Glass-Steagall, he admitted to not having foreseen the credit crisis and market deterioration. You tell me, okay? Call me old-fashioned. I believe actions speak louder than words. I also believe who you surround yourself with says a lot about who you are. So we know that Lawrence Summers, another one of former Treasury secretaries, helped push NAFTA, helped push deregulation. We know that he has served as a Biden campaign advisor. And now we know that Robert Rubin, another former Treasury secretary, king of the neoliberal class reunion, is sitting on presentations. He's part of the presentation the Biden campaign is giving to Wall Street donors. You tell me if your fortunes are going to change with Uncle Joe as president. Hope you enjoyed that last video. Hop on over to statuscoup.com where you can sign up for our email list and become a member for as low as $5 to $10 a month. Membership is how we grow. That's statuscoup.com/join. And remember, join our email list so we can grow the revolution with you.